Hi, I'm Mike Swanson. I'm speaking to you live today from Nashville, Tennessee, where Advocate Capital has built the best ever finance company for plaintiff law firms. Today's webinar is brought to you by Advocate Capital. I am the CEO of Advocate, full disclosure. I'm also the author of How David Beats Goliath, the only plaintiff lawyer finance training book ever published. If you'd like a copy, I'll send you an ebook. Just message me. You'll see my contact information at the end of this presentation. Advocate Capital is based here in Nashville, and we are purveyors of the IOTA Case Expense Funding Service. For more information, visit advocatecapital.com. Before we get started with our special guest, a quick disclaimer. Today is meant to be informational only. We're not trying to give specific tax, accounting, or legal advice. Before you take any action or stop taking any action based upon what you see here today, please consult your paid advisor, your professional advisor. For your convenience, we'll be sending you a link to a recording of this presentation in the next day or so you can use that link to share that with your advisors, your colleagues, and your friends. And we hope you're off to a great start in 2021. Well, today's special guest is Mr. Tim McKey. And Tim is co-founder of Vista Consulting. He's also the CEO and a licensed CPA. And he's going to take us through most of our content today. Tim, are you with us?
There we are. I am with you. Can you hear me well?
Loud and clear. And are you in Baton Rouge today?
I am in Baton Rouge, Louisiana, Red Stick.
Red Stick. So has it summer started down there yet?
It has. It's in the 70s today. So underneath this, I have a short sleeve shirt on, and I know that's not what's going on in some of the rest of the country. I saw it snowed in Las Vegas yesterday.
Yeah, it's pretty crazy. Snow in England I saw yesterday as well. So, well, Tim, thanks for joining us, and we appreciate very much your time today. And we know you consult with law firms all around the country. Can you tell us a bit more, though, about what you do with Vista and why clients or prospects listening to this would want to pay attention to what you have to say?
Sure, I'll do my best. As you said, I'm a CPA by training, and worked with the Deloitte firm right out of college back in the mid 80s. And got to a point after a couple of years with Deloitte that I said, hey, this big firm may not be for me. So joined a smaller local regional firm where I became a partner. And I was, of all things, a tax partner. And I think that's one of the reasons you asked me to jump in here today and talk about taxes.
Absolutely.
But after being a traditional CPA for about 18 years, made a pretty big switch in my career. Really, we went from what I call keeping the score to helping affect the score with a group of clients, digging into their operations. And we didn't coin the phrase operational metrics, but we use it a lot, and we still use it a lot. Mm-hmm. We look at measurements in operational areas, and we've really narrowed the focus of Vista to plaintiff law firms. And we've been lucky enough to be in over 150 law firms across the country and in Canada. And I always say Canada because I can then say we're international. So I don't know if that makes us any more qualified, but we've seen a lot looking at all functional areas of law firms, including their accounting area, their tax structure, and that type of thing. We've even begun through a sister entity, a CPA firm that I own, to actually perform CPA work for some law firms across the country. So we're that means tax preparation and compilations of financial statements and those kind of things. So that's us in a nutshell. We employ 11 team members in Vista now, which are consultants and have a programmer, and we're beginning to do a lot of digital things. So that's Vista, and that's me in a nutshell.
Yeah, and I can tell you, well, you and I, our organizations have a lot of clients in common, right? So I know that you've done work that has really helped many of our clients, and so that's why I like to introduce you to all of our clients and prospects. You're one of the organizations that help us deliver on the Advocate mission, which is to help an ever-increasing number of plaintiff lawyers get even better results for their clients. And so anything, as far as I'm concerned, that you and I can do to help plaintiff lawyers, whether our customers or not, makes the world a better place. So today we're going to talk about some topics that aren't as maybe exciting as marketing or this kind of thing that I know a lot of lawyers get excited about. We're going to talk about some really important issues, though. And first, would you take us through a little bit about accounting, specifically IOLTA accounts? Talk a little bit about that.
No, absolutely, absolutely. I think one of the things that for sure lawyers hear in law school is the separation of client funds from their funds. And they do this with a specific account called a trust account or an IOLTA account. There's a little bit of difference between just a regular trust account and an IOLTA account. The acronym IOLTA stands for, and I'm having to look at it to read it, it's Interest on Lawyer Trust Account. So that's an account where the attorneys hold client monies that it can be an interest-bearing account, but they don't get the interest, nor does the client get the interest. It goes to the state, and in most cases it goes to the state, and the states can use it usually for indigent clients, people who need legal advice and that kind of thing. So that's where that acronym IOLTA comes from. But it's an important account. We often or always really advise our clients to run any type of collection of money that has to do with a fee or client funds through that account. And I said earlier that this had to do with client money, but lots of times a check may come from an insurance company, for example, and it may be one amount, but in that amount may be buried the law firm's fee. There may be client costs that need to be paid, and then obviously the residual goes to the client. So we still like to see all income type money from a firm first hit their trust account and then get transferred into their operating account. So the deposits into operating are almost always, or at least 99%, come right out of their trust account. It's just good accounting, if you will. So that's kind of an overview of what an IOLTA account is. And we want to, it's so important that you keep these funds separate, because this is one of the areas where the bar associations are very super critical, super sensitive to what goes on, because you're handling client money. We often advise our clients to use different colored checks even from their operating account for their trust account. So that's a high level about what the account does and how it's used. And I could hit on a few other things, but any other specifics, Mike?
Well, sure. So at Advocate, we underwrite law firms. We've been doing that every day for 20 years. And so we're reviewing the balance sheet, income statement, tax returns, things like that. And we see IOLTA accounts being accounted for in different ways at law firms. And I wonder if you could help our viewers understand, in your opinion, should the IOLTA account balance and its associated liability, should that appear on the law firm's balance sheet, or should that be accounted for separately?
It absolutely, in our opinion, should show up on the law firm's balance sheet. Now, we have gone into firms that it's accounted for in a totally separate general ledger, if you will, if you're familiar with accounting lingo, just another accounting system. But we like to see it on the firm's balance sheet. And the reason that we like to see that is it kind of encapsulates everything that's going on with the firm in their financial arena in one place. And just to go back to, remember, it's client funds that are held in there. So you're going to have an asset account, which is cash, which is the IOLTA account, but it's not really your money, right? It's the client's money. So there should be an offsetting dollar for dollar or even penny for penny liability on the liability section of your balance sheet that offsets. And we in different states have different rules, but most states require that account requires that account, not just suggests, requires that account to be reconciled on at least a quarterly basis. Some have a little bit more lax rules, a little tight, a little looser, but we a little tighter or more lax. But what we suggest to all of our clients is that account is reconciled monthly, and again to the penny, where your liability equals the amount of money that's sitting, if you will, in cash in the in the bank account. And if it's not, then there needs to be some research done on what's going on with that. Because once again, this is an area that is highly criticized by the bar. And people, I mean, you hear about some of the worst and egregious cases of malpractice, and ultimately that could be criminal, of people borrowing money from their clients' funds. We laugh about it a little bit and say, hey, that's frowned upon, and for good reason. It's not your money. You cannot borrow from that. And I think I said earlier that you cannot also, no matter how large or how small the account, the lawyer cannot benefit from the interest from that account. That interest goes somewhere else. The client doesn't either, but the interest goes somewhere else. But it's a little tricky sometimes is, depending on the amount of money run through, there can be service charges on that account. And you also cannot charge that to your client. So we've seen it several times, and these big numbers are showing up in there that we couldn't understand why. And when we dug in, we said, oh, that's a service charge. Well, we then said, look, that's kind of a no-no. You've got to go to your bank and have any service charge for whatever reason pulled from your operating account.
Your operating account, right?
No, absolutely. So it's a little tricky, but it's highly important, highly regulated. It's the one thing that can get you, I'll go as far as say potentially disbarred if you have shoddy bookkeeping through your trust account. Not a good thing.
Great. Well, hey, we are live right now from Nashville, and my production team is telling me there are some audio challenges, I guess, for listeners. There is a way to dial in using your phone on the audio tab if you're viewing and having trouble with the audio. I've also increased the gain on my microphone, so hopefully that will help. All right, I'll try to speak up a little bit too. Production team, thank you for cluing us in on that. So one of the things, Tim, that we do see on balance sheets is that sometimes the IOLTA balance does not match the liabilities. And the one that gets us the most concern is when the liabilities exceed the IOLTA balance. Obviously, if there's extra money in the IOLTA account, we don't get as concerned about that. Do you see that happen very often, where the liabilities are greater than the account balance?
We have seen it, but luckily not very often. And if it's there, we always say, look, you've got to dig in and clean this up. And sometimes what we've seen that causes some discrepancy between the asset and liability, it usually goes the other way, as you said, more money in the account than the liability, because sometimes we issue checks that don't get cashed, and we have to go back and we have to search and try to find someone. And if that money stays in there for a period of time, there's some specific rules that vary from state to state of what you do about that. I mean, number one, some states require you to reach out in various ways to try to find the client or the provider if it's a medical bill or something like that, to get them their money. And then after a certain period of time, there's a great word that I like that is used here. It escheats to the state, which means it goes to them. If you've exhausted everything, it goes to the state. And once there, it goes into their unclaimed property in most cases. And if no one claims it, then it goes to that same fund that's used for indigent, those in need of legal services that can't afford it.
Right. So let me take a quick break here just to mention to our viewers that we're going to do a Q&A at the end here. There is a questions tab in the GoToWebinar controller. You're welcome to enter your questions there. We will not disclose your identity. Don't worry about that. And we'll be queuing those up for later. So one of the things I can share with our viewers as well with regard to IOLTA accounts from your lender's viewpoint, sometimes they don't quite understand what that is and how that should be viewed in terms of underwriting. And what we have noticed that certain underwriters can accidentally over-calculate the leverage on the law firm's balance sheet, right? Because they may have very low leverage in terms of actual debt relative to the assets, but if they have a very large IOLTA balance and a very large IOLTA liability, that looks like a lot of leverage. So it's important to understand that you may need to educate your lender that, wait, you understand this is not my law firm's liability, it's a liability to the trust account. So to look at the real net worth or leverage level of our balance sheet, you need to account for that. That's just something that we've noticed over time. It can overstate the leverage if your lender's doing a debt to value ratio on that. So great.
Mike, that's That's a great point. We often ask our clients how knowledgeable their banker really is and how's the
Yes.
relationship, just because of things like that. There's some real nuances with trust accounts. You know, you're in the business of advanced costs. You know how advanced costs are carried and things like that on the
Yes.
financials make a big difference. And there's some nuances, and that's quite honestly why we took the next step and said, hey, you know, we know how to do this now, and we can be, you know, the tax preparer and your bookkeeper and those kind of things. But it's important that that relationship's there. It's also important that your banker be educated
Yeah.
on those kind of things. It's a very nuanced area.
Yeah, you bet. And you mentioned advanced costs. That's another thing that we see law firms sometimes not doing in a way that helps them in terms of representing their financial statements to their lender, which is they don't put the advanced case expenses on the balance sheet as an asset, which, you know, they really are, because that's what the IRS says they are. The IRS doesn't really care how you account for them on your balance sheet. They care about your tax returns, obviously. But if your lender understands properly, they're going to want to know how much do you have advanced to your clients, right? That's to us, that's a viable asset to count in the net worth calculation. And many law firms leave that off, put on the IOLTA and IOLTA liability, and really ends up understating their net worth and overstating their leverage. So if anybody has more questions about that, you know, give us a call. We'll help you for free as to how to navigate that. Tim, are all states exactly the same when it comes to IOLTA treatments and
They are not.
guidelines?
They're not. It varies
Yeah.
from state to state. I would say the overall general rules are the same, but there are nuances on how long you have to search for a client or
Mm-hmm.
a provider if you're
Yeah.
holding money in the trust. How often do they scrape, if you will, the interest off, and they decide what to do with it? Those kind of things. So the big things, the big rocks, yes, the states are pretty much aligned, but there's some nuances in the details.
Great. Hey, here's a question from a viewer right now live, and they're asking, is it okay to have multiple IOLTA accounts for one state? I'm not sure why they would do that, but have you seen that?
I have, and I'm going to, you know, give you the ultimate consulting answer is it
Hmm.
depends.
Yeah.
You know, it depends on why. And
Hmm.
sometimes we have actually advised people to, when their IOLTA account, when we've gotten there, is I'm trying to find a real nice word, is really messed up.
Right.
Okay. Sometimes we may want to, you know, stop the madness, open a new account, and let the attrition of ins and outs, you know, just
Hmm.
into the new one, get everything out of the old one and see
Yeah.
what's left. And then that allows us then to dig in a little bit better.
Hmm.
To my knowledge, it's not illegal, immoral, or unethical to have multiple IOLTA accounts, but it's not advisable
Right.
in most cases.
Maybe in a
If you have
transition or something.
Yeah, if you're in a transition, that's what it
Hmm.
should be. That, hey, if we have two or more, we should really be doing our best to get that down to one.
Hmm.
In fact, we actually worked with a client, and I don't know if they got advice from their state. But what they did was they were actually made a sub account, so it only showed up as one, but they quarantined that money. So
Great.
again, it's achieving the same thing, but the details can be just a little bit different.
Hmm. Yeah, one more observation and then a question for you. As a commercial lender, another thing that we notice is that some law firms, when they report their revenues to their lender, whether it's to us or their bank, they report the total amount that's flowing into the IOLTA account, including their client portion and co-counsel fees, because obviously co-counsel fees flow out of the IOLTA to the other law firm, not into the operating account of the law firm in question, and that has the issue of really grossly overstating law firm revenues, which can get you in trouble. You don't want to overstate things because that client portion is never your money. It should not appear on your income statement, right? Neither should the co-counsel fees, because those are earned and owed to the other law firm by the client. So just a word of warning, if you're reporting your P&L and your balance sheet to your lender, be careful not to overstate things. You want to be accurate, and you don't want to include your client's money in your P&L and the other law firm's fees they earn in your P&L. The other
100.
question is, thank you. The other question I have for you is, I bet you every plaintiff lawyer watching this knows some other plaintiff lawyer who had their bookkeeper embezzle from them. It's just so common.
Mhm.
Any ideas or tips that you have for one of our viewers, to help keep an eye out for this, prevent this kind of thing? Actually, it's whether it's IOLTA or operating accounts. You've probably seen this kind of thing. What's your observation, Ben?
Unfortunately, yes, I have seen it,
Yeah.
from some of our clients and from anecdotal discussions, and it's never a pretty scene. We call that in the accounting world internal controls. Internal
Hmm.
controls over how bills are paid, internal controls over how cash is handled, or checks or income or whatever. Yes, so what we when we've been asked to really look and evaluate a system of internal controls, one of the quick and easy things to try to do is to have multiple people involved. You don't want the same person reconciling the bank
Hmm.
statement that's receiving invoices and paying bills. It makes it conducive to
Hmm.
do something that's nefarious. The other thing that you can do, and I'm going to come back to that in a second, but the other thing you can do is you can have someone totally independent get an unopened bank statement, or get the bank statement, if it's electronic, funneled directly to them and not first to the accounting department. And what you do then, you can go through and you can spot check, if you will. You can pull certain checks and walk in there periodically and say, hey, I want to see the invoice for this. I want to see if something looks suspicious, or
Right.
it's a big number or something like that. Hey, I want to see it. And that lets the accounting team know that, hey, somebody is watching, right?
Hmm.
So going back to multiple people, uh, we want to have that. We say that there are really three kind of people in the world that are in your accounting department. There's one guy or gal who would never ever steal from you.
Hmm.
Then there's a guy or gal that may be in there that's always looking to do that,
Yikes.
and which is yikes, right? But there's the one that that will only do it if it's easy. So
Hmm.
setting up these internal controls really stops that. If you have someone that's really a bad egg that's wanting to do something, they will try to do something. Most people aren't like that, thank goodness, but we do hear the stories, and it's never a pretty story. Always internal control. We've actually been engaged by a client to come in and evaluate and provide suggestions specifically on that.
Right.
So yeah, it can be troublesome.
Yeah, and it's always the person that you grew up with, go to church with, your kids play together, you've known for 20 years, and then you find out this happens. And unfortunately, bad things happen to good people. And I'm aware of a case where the law firm administrator began dating someone who was abusive, threatened their children unless they steal for them.
Wow.
Right. So really basically holding a gun to their head. So it's not so much that people are trying to get you. It's that they can sometimes be in a very difficult position. And I really like your concept about having separation of powers. And I've often told law firm partners, look, you open the bank statement, right?
Right.
You open it. You have it delivered to your desk, or if it's electronic, you have it delivered on a certain date. And like you say, you spot check it to let them know. So if that bookkeeper is someone's trying to put her up to something, they can say, well, I can't because they're checking me. And if there's two people involved, they have to collaborate to steal from you. It can't just be one person, so it makes it that much more difficult. Hey, another audience question. So IOLTA is an interesting topic for folks today.
Good.
They're asking, can you have a non-attorney signer on an IOLTA account? A non-attorney signer of checks, I guess.
I believe that you can. I am not 100% sure about that,
Okay.
but I'm 99% sure that you can. Just
Hmm.
like any other account, the attorneys do not have
Got it.
to sign you, but you have to go through your bank and get the signatory on there. And what we
Yep.
like to see, not necessarily on IOLTA accounts, but on other accounts, if it's over a certain dollar amount, sometimes we like two signatures, which again is another form of internal control. So no, in most cases you
Got it.
don't have to have an attorney.
Right. But in this case, I would say to our viewer, check with your state bar just to be sure in that
Yeah,
particular
great.
instance, since we're not giving out specific advice on that one. Good.
I
Wow,
agree with that.
we've used up some good time here with IOLTA. It's an important topic. I'm glad we're covering it. Let's start moving on to what else we're going to talk about today. And today are a couple of just maybe points you have or things you'd like to share regarding tax for 2021. What do you see coming up, and is there anything specific to the 2021 tax year that plaintiff lawyers should be keeping an eye on?
Yeah, and it's interesting that when prep for this, there's really not a lot of new changes in the tax law from 19 to 20. There's some variances, like for example, the tax rates are the same. There's been a little bit of inflation adjustment to the brackets where that those rates are applied to. So no biggies, but I do want to talk about something that may happen that we all just need to watch. With the new
Okay.
administration coming in, everything I read, everything that we get as a CPA says that we're probably going to have some type of adjustment and tax increase somewhere. Okay. What we don't know is if it's going to be retroactive. Let's just say that we get into third or fourth quarter. We don't like that. CPAs don't, but we've seen it before, or some things could be retroactive to the first of 21. And let's just say though that doesn't happen. When we get toward the end of the year, a normal tax planning normal tax planning ideas include deferring income to the next year with time value of money purposes and accelerating deductible expenses is kind of the norm. But if we don't have any change, but we really feel like 2022 there's going to be a change, we need to be. It's a little counterintuitive. Hey, maybe just this time, we may want to consider accelerating income and pushing deductions to take advantage of lower tax rates if that happens. And in the tax world, we usually say we play with the rules that are there, but there's been so much talk and chatter about potential increases that could be retroactive. We hope not, and I'm not trying to plant that seed anywhere if there's a legislator listening that it should be, but but it's going to happen in 22. There's a little bit different thought, a different perspective than the normal defer revenue, accelerate income. So, but still, I mean, if you're preparing for your taxes, number one, my advice is be as organized as you possibly can for your accountant. If they provide you an organizer from the prior year, always use that, because it gives you a tickler system to go through to know, hey, this was on my last year return, to make sure you have it. Because being an accountant, we want to get all the information. We know you want to provide it, but sometimes it's just not there, and those things will trigger questions. Hey, I need to find this. I need to get this from somewhere. Always contribute to your retirement account if at all possible. And one other thing before I forget, there's a nuance this year with the Paycheck Protection Program money. Luckily, and I'm sure most of you know that now it was never intended to be taxable, but there was a lot of talk about not being able to deduct the expenses you use the money on, which in effect makes it taxable. So
makes it exactly.
But luckily, with the new round of PPP legislation that came out, that basically what happened was the legislative branch told the IRS, no, it is both not taxable upon receipt, and you can deduct the expenses that you use. So that was really, really good news, because I had a lot of clients wondering exactly how this was going to affect them, right? So
yeah, debt forgiveness is normally a taxable event.
Taxable event, right? But in this instance, it's not. One more thing that you might, if anyone has questions on PPP, it's a very nuanced area there too. If you're to be eligible for the next round, there's some details in it, and that was the new legislation that came out about a month, maybe a month and a half ago, that said we're going to have a new round. Your income, your gross income, has to be 25% less than a matching quarter in 19. In other words, we're looking at 20 and 19. If you drop 25% in gross revenue in the matching quarter, you can be eligible to get the second round of PP.
The second round of PP.
Yeah.
Okay.
So
I didn't know
to
that.
be aware of.
That's really helpful. And PPP from Advocate Capital's perspective has been wonderful. I could just confess to you that we have had the best year ever in 2020 in terms of credit losses. We haven't had any. It's been an incredible year, and I attribute, and as far as clients getting behind on interest payments and things like that, the PPP I think has been a lifesaver and a great bridge across the pandemic for many businesses, but including plaintiff law firms, and many of our clients got the PPP, and I'm glad they did. Now, if someone's listening, they're not sure if they can get it, where could they maybe obtain a PPP loan? Where's the best place to go? Should they go to the SBA or call you, or?
No, I would say the first call should be the bank with which you have the relationship. I'll say your local banker who you work with.
Yeah.
They're the ones that SBA is going through. Don't call the SBA. They're depending on
I have
everything.
a trick question.
Yeah,
don't ever call the SBA.
They depend on everything going through the local bank. They're administering the product. SBA is just guaranteeing the funds. So absolutely. And again, I would say if you're eligible, you should really take a hard look at getting. And I've had some clients say, should we look at it or not? And my answer is absolutely. There's some details in there you have to be aware of. And frankly, I don't have firsthand knowledge or carried it in my head at every little detail, but certainly you should look at it.
Yeah,
And
agreed. We love when our clients got the PPP, and we want them to get some more because it's essentially a free equity injection if you do it right, like you say, cross T's and dot I's and make sure it's forgiven. But it's basically an equity injection, and that's fantastic. I would love to get some free equity over here at Advocate, but I can't. So here's another question from audience, from a viewer right now. And this is pretty specific. I don't want to put you on the spot too much, Tim. You may not know. What is the deadline to apply for forgiveness of PPP received in 2020?
To my knowledge, they haven't yet set the absolute deadline. Now,
Okay.
I would defer to your bank on that. If anyone that was totally involved in that in the beginning, there were so many regulations, rumors, and even documentation from different experts that came out that got changed or was never right to begin with. Now, I think they've tightened it up a lot. They originally said it had to be paid a certain number of days after you received it. Then it moved to the end of the year. Then it has moved again. So I don't know the absolute date right now. It may, I would say, I mean, we can find that out. I mean, you could call your banker and get it. They're going to be much more on top of that. But no, I'm fine with questions I don't know.
Yeah, it's all right, Stan. And I think your advice is really good, which is call your local banker, whoever you got the PPP loan through. They should be guiding you through there and giving you advice on how to deal with that. We advise folks the same thing. Now, by the way, if you're an Advocate Capital client and you need some help with PPP round 2, give us a call. Give your account manager a call. We'd be happy to see if we can help you with that. Great. Anything else on PPP? Round 2, we talked about it. Okay. No other questions on PPP. Let's move on to kind of our final section here, if we will, which is going to be financial management and KPIs and this kind of thing. So let's talk about, first up, what's a KPI, first of all?
KPI is just the initials for key performance indicators, which are usually some type of metric, whether financial or operational, that gives you information about your law firm. And we think there are generally two types of KPIs, and I'm not going to go too deep in this. There's scoreboards where it just says, hey, we're winning or losing, or we're doing well. And then there are diagnostic reports that are details of what's going on. If you're keeping the scoreboard analogy in the sports, if you get a scoreboard that says, hey, we're doing really well, but that doesn't tell you who's blocking and tackling well, right? So there are usually more detailed reports, KPIs that can tell you those type things. We look at owners and high-level managers usually look at scoreboards, and your people that are more boots on the ground and supervisory people get into the diagnostics to help make corrections, if you will, to keep those scoreboards where they need to be. So I hope that helps a little bit.
Okay. Yeah, and we're not going to get into too much detail here, but know that you can, and we're going to talk some more Tim, but know that Tim's contact information will be at the end of this presentation, so you can follow up with Tim. I'm sure he'd be happy to speak with you in more detail about what might work for your law firm. So this is more of a general discussion of such things. So obviously there's the P&L, there's the balance sheet, there's a cash flow statement, things like that. Other than that, Tim, what are some other reports that you recommend law firms are using to manage their practice?
I'm not going to let you get away that quick using those three uh, because lots of firms do not use cash flow statements. They get a P&L and they get a balance sheet, but they don't look at the cash flow statement. And I'm going to go back. If you don't even know what that is, talk to your accountant, talk to your internal bookkeepers, because there's a difference between what your income can be, what you actually earned, and then how much cash you have and where it goes. And just about all of our clients, we insist that they get a cash flow statement that says, okay, because I've had people say to me, look, we've done really, really well. I know we have. Look, there's, X number of dollars on the bottom line on our P&L, and I don't have two nickels to rub together. Where'd it go?
Right.
Well, that cash flow statement help you understand that. And get an accountant or someone who can explain it really well that speaks non-accounting.
Yes.
So again, Mike, I didn't want to pass that by because a lot of people.
No, that's all right. You're right. You're right. And to tell you the truth, when I speak on general law firm finance, I like to throw a few questions out for the audience, and one of them is, what period of time does a balance sheet cover? Is it a week, a month, a quarter, or a year? All of the above or none of the above, and it's a trick question, right? It's a snapshot in time. It doesn't cover a period of time. So really, our viewers are awesome people. They help people in their community. They're awesome lawyers, but they've an undergrad in history, political science, English, whatever. They don't learn business in undergrad. They don't learn it in law school, right? And so it's up to you and me to try to help them understand it. So I did kind of whiz by that, and I love the point that you made, which is, don't just pay your accountant to do your taxes once a year and maybe do your financial statements. Have them sit down with you once a month and say, let's look at this together. Take an hour, it's worth whatever their hourly rate is, and do that every month. And then it starts to string together a story of what's happening at your law firm and trends that you can spot. And you can spot problems before they become big problems. So many law firms just say, here are my receipts, do my taxes, and they move on. So I thought you had a really great point there.
I'm going to jump in on that too, because it's a little bit, I can go a little bit deeper on that.
Okay, please.
What we insist on is just what you said, is meeting with the clients more than just to gather tax data. And I want to also advise to think about keeping your books on a management basis as opposed to a cash basis. If you have your tax guy help you set up your books and records, he's going to set them up for ease of preparing a tax return, which sometimes doesn't give you as clear information if you're coming at it from how do I want to use this information to manage my business. Okay, and that I guess off the cuff comments about that is we manage 365 days a year. We pay taxes one time, but a lot of time, one day. So a lot of times what we see when we go in is the books can be distorted because you bought a piece of equipment and you expensed it all in 1 year. That's great for a tax standpoint. And we're not saying don't take advantage of all the taxes. Just don't adjust your books to management. Adjust them from management to tax, because you only got to do it one day, and then you can get it. Now, if you're doing preparation and planning, you do it more often than that. But lots of times you can get distorted information if it's only set up on a tax basis. So wanted to bring that in.
Good point. Good. Thank you, Tim.
You're welcome.
Okay. So I breezed by the P&L, the balance sheet, and the cash flow statement. In addition to those reports, are there some others that you develop for your clients or that you recommend they take a look at?
No, absolutely. And I'm going to hit them pretty quick. I know we're getting strained a little bit for time. We like to look at what we call a condensed or compressed or P&L statement. In plaintiff law firms, they're what we call they're the big three expenses. Every plaintiff firm, the largest expenses are always these three. It's attorney compensation, non-attorney compensation, case acquisition cost, another term for that is marketing. Those three usually compile the largest amount of expenses on your P&L, and then everything else you can throw into other, the rent, the utilities, et cetera. So if you look at, and look, there's the combined, the P&L. Thanks for throwing that up there. This is just an example of, some percentages that we look at. And if you look across this top, you've got startup, turnaround, realignment, sustaining success. Those are the phases that we drop firms into. Hey, where are you on this spectrum? And then we look at percentages. And I'm not, don't leave here and say, look, Tim said that we should be doing X percent. That's not it. This is an example just to get a read on where you are, and then we can attempt to move the needle, right? Because once we know, and we know the three largest expenses are the top three there, if you want to move the needle the biggest, you affect those, and you can dig in there and look at it. So that very, very important little condensed P&L. I'll throw
I like it. I've seen, if I could throw, I've seen clients whose row two, the non-attorney compensation keeps growing and growing and growing, but the attorney doesn't. And it's like they're working just as hard. More and more employees are making no more money than they did the year before and the year, before that. So this would be a good way to look at that.
Well, an analysis that we always look at, because sometimes the attorneys who are maybe getting paid a commission on what they bring in, they want more and more help, right? Hey, I need 10 paralegals, I need whatever. Well, then when you start really looking at this and saying, hey, what is your team producing? And can you go to that slide we talked about, Mike, the stars analysis?
Here it is. I think it's kind of small.
Yeah.
Is this it? Yeah.
Yeah, this one. And I'm not going to try to explain everything on this, but this is an Excel spreadsheet that if you email me, I will send you the live version of this. And what this attempts to do, it's another financial analysis for your for your firm. It looks at what each attorney, what they produce relative to their compensation, and then relative to their compensation plus their direct cost. If they've got paralegals or assistants working directly for them, then we want to see what's the ratio between what they're producing and what their cost is. And this is a very simple way to look at it. So if my contact information is there, if you shoot me an email or a phone call or whatever, I'll make sure you get a copy of this. I know it's difficult to read here.
So every lawyer producer is looked at as a little profit center of their own.
Correct. We often call this a profit center analysis or a stars analysis.
Okay, so, fantastic.
But,
are there other reports that you look at typically?
Well, we like to see departmentalized financial statements. In other words, if you've got various product lines or case types, we want to break that financial, the P&L up into, what's going on with PI, auto, dog bite, Social Security, workers' comp. We want to break that up because, again, we're not saying we're going to do, if something isn't exactly right, we're going to do away with it, but we want to know. We want to know where you're really profitable and what you're really good at, and then you may want to shift some resources around a little bit. So departmentalized, and the last one I'm going to talk about today is if you do not do a budget, you should.
Okay.
And when I say budget, I want to make clear what that is. I'm not saying that you should go through your financial and say, I'm not going to spend more than, I'm not going to spend more than, X number of dollars on office supplies. What I'm saying is you should project what you think you're going to spend on office supplies and every line item on your financial, and then do just what this does. If you can see it here, it compares budget to actual. Okay, you want to know what we thought we were going to do, what we actually did, and what's the delta, what's the difference, right? Because if there's big differences that you don't know why, then it should be looked at on a monthly basis and dug into and say, hey, we thought we were doing this and we're doing something different. What's going on with that? And it might be just you miscalculated, but lots of times we find that there's something that can be done. And I'm going to make one last comment on this is I've never worked with a business, yet alone a law firm, that when they did a budget and they did it over 6 to 12 months and they looked at it monthly, that they did not learn so much about the finances of their law firm. Because a lot of times what we think is not actual. and it gives you more information again to make those well-informed business decisions. And that's what we're all about, is getting you that information, and
Yes.
then if you need it, helping you with those. So
Yeah, fantastic, Tim. Fantastic. Hey, we have a couple other questions if you have a minute.
sure.
Great. So I'm going to jump back to PPP. It's a popular topic here. This is an accounting question. Oh, wait, let's see. Here it is. Okay. How do you account for the PPP if it's not a loan? Will it be income and expense wash?
Where that's pretty technical. We are actually carrying, because my firm Vista got some PP money too.
Okay,
We're
great.
still carrying it as a loan right
Okay.
now. When it gets forgiven, it's going to be moved to a non-taxable income category, and
Okay.
we're not going to use that income from that loan to calculate any of the percentages that we've talked about here. So, in my opinion, it should just be one number that goes to a special place on the return. It's
Right.
called an M2, where I'm sorry, an M1 schedule on your return that says, hey, we got this money, but it's legitimately not taxable.
Yeah,
So
I kind of look at it. I kind of look at it as convertible debt in a capital markets situation where it's debt and it's convertible eventually to equity. Although the government's not taking any equity back for it, which is fantastic. So it's kind of a free equity, but it does start as a loan. Thank you. One other question: is it okay to post client costs to your P&L? These are reimbursable client costs to your P&L. Or I'd add to that, or should it be in your balance sheet?
Yeah, and I would love to. I need some clarifying questions from my end, but if you're asking if the your client costs should be carried on your P&L or your balance sheet, the answer is your balance sheet. Number one, it's the IRS guidelines, and they're very strict guidelines that say you should do that. But also, I go a little bit of a different angle of why you should do that too, is that it can if you're actually putting it on your P&L, it distorts the true financial performance of your business, because you're deducting these expenses that are really investments in the cases you have. They aren't an expense, really. They're an investment. And you're loaning money to the client, you're investing in their case. So it can give, if you're in a growing firm and you're putting more and more money into cases, and you're recording this on your P&L as an expense, then you can look at your financial statement and say, we're not doing very well, which is the exact opposite from what's really happening. So if you're using your financial statements as management tools, which I say you should, then it needs to be on your balance sheet, and it needs to be interpreted properly. And I hope I've given a little bit of how to interpret that also.
Right, and so we read tax returns and financial statements of law firms all day, every day. We have a team of people who do that, and we see it both ways, frankly. I'd say it's probably 50-50, where law firms over time have just said it's an expense, it's a case expense, it goes on the P&L, and we don't tell them what to do, we observe what they're doing, but it does kind of distort things, because it also understates your net worth, kind of as I alluded to before, because you're showing that case expense as an expense rather than adding it as an asset on your balance sheet, which has a more accurate representation of the overall net worth picture of the law firm. And the IRS, like you said, 624-8013, I think it's a private letter ruling. Message me, we'll get you a copy of that. They don't so much care about how you represent it on your financial statements. They care how you do it in your tax returns, but why not do it the same way in both places, which is you really shouldn't be deducting that.
I agree, because going back to my reasoning, Michael, is that if you put it on the P&L, I think it distorts the management picture. And and what we're all about is using your financial records to help you manage your practice. And if you're doing it that way, carrying it on the P&L,
right,
it can be a distortion.
Yeah, it's not. It makes you look less profitable than you are. Now, of course, you're going to do a cash flow statement, which will show to you why you have phantom income and don't have the cash to pay for it. But nonetheless, it overstates your expenses. Or if you're in a wind down mode, right? If you're in the mode where you're collecting a lot of previous invested expenses and you're not really investing in new ones, it kind of overstates your income. and you may end up paying more tax than you should
And if
and
you're
wind
using
up a
advocate capital, you're not creating the phantom income.
There you go. Appreciate that. Great. Here's a hey, audience members asking here real quick. If we got on late, is there a way to view the beginning of the presentation? There is. We will send a link to this entire presentation as a video that you can watch within a day or two of the conclusion of this. And you can share that with your friends and colleagues, your tax, accounting, legal advisors, if you have specific questions for them. Again, we're not trying to give you specific advice on your accounting or tax. Consult your experts on that. This is more designed to start getting you thinking about these things for 2021 and beyond. Great. Okay, well, Tim, are there other reports you wanted to mention? How are we looking?
I can go deep on a lot of things. We also like to determine for our clients what their Pareto point is, and I'm going to explain that in a second, in regard to their fees. And what I mean by that is, at what point, if you took your fees for the year and lined them up on an Excel spreadsheet from the largest fee to the smallest, I would say you go down that list until you reach 80% of the total number at the bottom. So what that tells us is that a certain number of fees made up 80% of your total. And there's a point there, we call it the Pareto point. And that point could be, I'm picking a number out of the air here, it could be $25,000 fee. It could be a $35,000 fee. The point that I'm making is there's some point at which if you add value to those top 20% of your cases, then it's absolute more dollars to the bottom line. So we generally want to classify cases as they come in, and we try to determine, is that case above or below my Pareto point? Because not that we're not going to do a good job on the smaller ones, but we put they may be more fast tracked because there may be coverage limitations, there may be injury limit, there's 1,000 reasons, and we could go through that. But if it's a case that's above your Pareto point, we want to make sure that we're doing everything possible to maximize the value, on those cases. And again, I'm not saying you don't pay attention to the bottom ones, but pay particular attention to the top ones, because added value there helps that client more, which also helps you more. So that's another report that we like to look at.
Well, great. Well, we're actually running out of time, which is a good thing. It means we've had good engagement with our audience. And I'm going to open up right now for additional questions. If you have questions, you can enter them in the question dialog box in your GoToWebinar controller. While we're doing that, seeing if more questions come through, I'd like to put up Tim's contact information. Tim, you can see him on the screen, part of one of the co-founders of Vista. There's his email address and, wow, your cell phone number. That's very nice of you to put that up there. I'm not putting mine up. And you can visit Tim's website. Text Tim. He likes texting. That's good. Actually, I like that too. Most people do now. That's his website if you'd like to visit it. This is my contact information, advocatecapital.com/Michael-Swanson. You can also click on the About tab and find me on there. Message me through there or call our toll-free number. So let's see if we have more questions coming in. It looks like we may or may not, while we're waiting one more minute or two, this is the contact information for Advocate Capital, and Advocate Capital sponsored this webinar. We have a webinar per month this year. Stay tuned for additional webinars. If you'd like to see other webinars we've done in the past, you can visit advocatecapital.com/videos, click on the webinars button. It'll jump you down to the webinar section. We're always trying to produce more content to help plaintiff lawyers. We know that you are the keys to the courtroom for your clients. We know that you're fighting like crazy, especially the past year. Talk about an uphill battle. It's always an uphill battle, and now it's COVID and the having to do Zoom and the courts are closed and this kind of thing. So we want to do whatever we can to help plaintiff lawyers. Okay, it looks like one last question, Tim. Is there a rule of thumb percentage to use for fee sharing with attorney case managers? For example, incentive pay comp. Let me say it again. Is there a rule of thumb for a percentage to use for fee sharing with attorney case managers? For example, incentive pay comp. What have you seen?
And I want to make sure that it says attorney case managers. First of all,
It does
if you're
say that. It
sharing,
does. With
if you're
attorney
sharing
case
fees
managers,
with your case managers that aren't attorneys, we got another discussion we need to
we
have.
got trouble.
Yeah.
Yeah.
You know, if it's with your attorneys, there is some, yeah, I hesitate to say rules of thumb. We like to try to keep attorney compensation. I'm just going to talk about attorney now in the 20 to 25% of their production range. And
Okay.
that can vary. Don't hold me to that. It depends on the type firm you have. You know, when we're talking on a webinar, you know, I don't know if I'm talking to a high volume, generally lower value in cases, or a high value, lower volume of cases, or
Sure.
some type of hybrid. So
Mm-hmm.
it's dangerous for me to try to, you know, cover everything. I
You
haven't
bet.
walked into 2 law firms that I said this law firm is exactly X is just like Y. It never ever happens. That's why, you know, all of our work is really custom to what you have, and we want to assess and say, where are you now? And then we say, let's try to improve that.
Yeah.
You know, so we have to get a baseline. You know, we've been asked before, hey, can you consult with us on X? And the answer is yes, we can. But before we do some type of assessment to know where you are, quite honestly, we're guessing. We can tell you
Right.
what best practices are. We can tell you what we've seen in innovation, but what's specific for you, we're guessing. So that wasn't a good answer for whoever asked that. But if you shoot me a text or give me a call, we can talk more detailed on that.
Well, that was our last question. If you have more questions, contact Tim or myself, probably Tim, right? You saw his information on the screen. You will get a link to a video of this presentation. I'll add one observation on attorney case manager compensation. What I have noted is that our more successful clients at Advocate are the law firms that err on the high side of comp for their attorneys on staff. Because if you don't, you're training your future competitors. If you're trying to pay as little as you can to those attorneys who are actually moving the cases forward, learning how to move those cases forward over time, if you're not toward the high end of the comp, you're going to lose them. And I've seen it both ways. I've seen law firms that spin off future competitors on a regular basis in their town. They're just training them and spinning them off, not meaning to, because they're undercompensating them. And then I've seen others where the owners really have gotten smart, have set a comp program that's so good that they don't want to leave. And those are the ones that can grow to a PI firm of 20, 30, 40, 50 lawyers, where the owners end up being a CEO working on the business and not in the business. That's my general observation, Tim. You don't have to agree with that if you don't want to.
I do, but again, each individual case is so different. And but yeah, and as a general matter, absolutely.
Yeah, you bet. Well, we're at the end of our hour. This has been fantastic, Tim. Thank you so much for taking time out. We hope to have you back again in the near future so we can learn more about how to manage a law firm like a business, not just an art form or a practice, if you will. We really appreciate you being with us.
Thank you very much. Anytime, Michael. Always a pleasure.
To our viewers, again, you'll get a link to a video of this so you can share it with others or rewatch it. Reach out to Tim and myself. We can help you. It's our passion to help plaintiff lawyers get even better results for their clients. And until next time, this is Mike Swanson speaking for Tim McKey, and we wish you the best. Have a great day.
Thank you.